Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to dive into Canada, look at a recap on their sales, where they're at, and compare that to the U.S., and in particular with one state. Look at some current regulations with Canada launching some beverages as well as some concentrates coming up, and then how that's going to impact the international markets in the eventuality that cannabis is an international commodity, looking at current trade wars, margins, pricing, and international commodities. On the line with us is Dan Kemmis, our CBD correspondent with Good CBD Products. So Yahoo Finance has an article that asks about how much legal marijuana Canada has sold since legalizing adult use. There's estimates that there will be about $10 billion in annual sales 10 years from now, which is an interesting point. Looking at sales from October when they legalized, it was $53 million. And then now, well, at least in May, it was $85 million. So a $30 million increase in that period of time, which works out to be on an aggregate basis about 15% in sequential quarterly increases, which isn't bad. And so looking at the dollar amount, they've logged in $500 million in sales. And Canada's recent double-digit sequential monthly sales progression would suggest that it has a shot to land between $800 million and $900 million in revenue for the first full year of sales.
You know, Cron, I got some friends of friends up there, right? And what they would say is this. Right now, the underground is moving hard and fast, right? Because it's all about distribution and supply and demand. And Canada, they started out, they got out early. They were out the gate early. But the rollout has been a little mired in bureaucracy, maybe, and then all of the hurdles that go with all of the regulations because of cannabis stigma. It's amazing.
It has been interesting watching the rollout in Canada. They've had some similar trends that we've seen with every new rollout amongst the 11 states that we've seen. But the one anomaly is the price per gram. According to this Statistica Canada experimental estimate, that the price per gram is $7.43, the lowest since 1981. And we've seen normally prices per gram in legal states in the U.S. being $30 and then cutting that in half eventually, whereas Canada just bucked the trend, had a complete anomaly on average price per gram, less than $15. So trying to be competitive and yet still having difficulty in sales where 46% of Canadians are still buying in the black market has a lot to do with low quality, high prices, some other issues. But there's going to be ultimately more competition as we see with the international commodities. You're going to see that with hemp, CBD, eventually CBG. And so some issues with Canada, there's three things that the article points out that shows weakness that can be tied to regulatory issues with Health Canada slowing those sales. Vancouver was one of the last provinces up there to offer retail sales. The second has been packaging. A lot of companies are waiting because they don't want to drop $40,000 on packaging, only to have rules and regulations change. We've seen that in Washington, where the fall of 2018, some changes in the laws would have affected 70% of edibles and all of those packaging, with everything from crazy stuff like the colors on the packaging to the shapes of the product. Incredibly restrictive. Ultimately, that was dropped, but that can kill a company.
You know, you spend a lot of money and then somebody says, well, geez, all you need to do is put a sticker on it. You put this sticker on it. But in your design, you've already had these things printed and there's really no place for the sticker that wouldn't, we'll say impact the design as an example, right? And eventually you end up in a place where, what was meant to be this gorgeous thing now has a funny little sticker on it that says, warning, this is terrible or whatever. Again, they're little things, but they add up and they're big things. And the next thing you know, you literally have you bought a lot of boxes because you thought you'd save some money by buying a lot of them. And now you're literally, you're either marring them or you're throwing them away. It's a rough biz.
Hemp and cannabis are an agricultural crop, and farmers aren't necessarily businessmen, which brings us to our third point or third problem that relates to growers themselves. A lot of them weren't really willing to increase in scale because of the rules and regulations. So they waited for the law to pass, and then they received their capital investments to scale up. And so waiting for the last minute meant that they had to obviously wait for everything to grow, and the lack of supply meant an increase in demand, or maybe just the lack of a shift from black market to retail. It's hard to infer from that data. We've seen similar issues in the Pacific Northwest between Washington and Oregon with supply issues. There's a Marijuana Venture article about the stabilization in the Northwest. The interesting part about the article is that it says the only states that will be immune are the ones where the government creates artificial conditions that favor some businesses over others. And so what they're specifically referring to is the oversupply issues in Oregon with 6.5 years, and then Washington, which has 1,200 growers, maybe only 800 of them are active. And so ultimately, if you don't limit the amount of suppliers, then you can just create too much. They'll put it in silos or whatever, keep that the price artificially low by creating too much. And yet I think we're still only growing at about 50% capacity in Washington.
Again, from the ground, right? When I talk to some of these farms and some of these people, they're doing things like self-limiting, right? They recognize that they're competing against themselves. And then I would say, bad actors that were acting either out of naivety or possibly even, not to be all conspiracy minded. I look at some of these imbalances and I say built to fail so that large operators can come in. It's an opinion. It's just an opinion.
Greg James of Marijuana Venture, who, by the way, is going to be on the podcast in 2 weeks at the World Trade Center for the opening of Hemp Fest. We're going to be talking about all things that are marijuana media, if you will. So Greg James is going to be here from Marijuana Venture. So he goes into two simple options that are really about just free markets. So one is let the market decide. So in this case, some will fail, others will survive, and the consumers will ultimately decide who wins. On the second side, you let the states decide. And so I think this is a split between Canada and the US, where in Canada, it's a free market. They're publicly traded. You let the market decide. In the US, with the States Act, they may just let the states decide, where you have vertical integration or restricted licensing, special deals, and all of that will ensure that a few lucky winners will have high profits and a greater chance of survival. However, consumers will see fewer products, higher prices, and generally lower quality.
We've already seen it, right? There are some states where they literally, they dole out 5 or 10 or 18 licenses. We see other places, like you say, Oregon and Washington, where oversupply is it's a giant, critical, ridiculous issue. 6.5 years worth of extra weed sitting in Oregon. It's part of why I'm going to go to Oregon, Cron. I'm going to spend 6.5 years down there hanging out.
So comparing all of that data between Canada and the US, we're looking at emerging markets. We'll take Oklahoma, for example. So there's some public data that reveals some interesting things about Oklahoma City. A review of information from a limited number of states with medical cannabis programs show that Oklahoma has the highest patients per capita at almost 4%. Compared to the states with the lowest patient per capita, Ohio, with 0.3%. So although Oklahoma has a high patient percentage rate, it has no cap on the number of manufacturing or retail operations, which is detrimental for a place like Oregon that we've seen with 6.5 years supply. So as a result, the state of Oklahoma has 1,673 licensed dispensaries. That's a pretty good start. 3,559 cultivators. Wow. And 154,000 patients. Let's go back to that licensed cultivators numbers, 3,559 licensed cultivators. So that means that there's currently 92 patients per dispensary if all licensed dispensaries becomes operational. Great, so they have a place to go. However, what about that supply? When you have twice as many cultivators as Washington has, and probably Oregon, that's going to be a little bit too much where you don't have 3,500 tomato farmers because there's not a need. You don't have to supply that much. And so unless Oklahoma is trying to compete with Canada, I'm not really sure what they're doing.
A lot of good biz to be done there on the medical side. There are, that patient count you were mentioning. Cannabis has taken a little bit of a hold out there, and people get it. I'm looking forward to being on the ground out there myself. This is the thing. Each of these little markets aren't so little anymore, right?
Right. In order to survive, it's going to be an international market, which brings us to our final point with the marijuana venture on the trade war with cannabis. We've covered on the podcast before international opportunities like Puerto Rico, which provides the best place for CBD companies wanting to sell to the U.S. market as well as internationally. So this article goes into some of the costs or problems with the current trade war with the Trump administration and China affecting more than $200 billion in products across multiple sectors of the economy. And so obviously it's just a matter of time before it hit the cannabis supply chain. And so talking about this, in other panel discussions, there was an Intercontinental Cannabis Business Exchange where I discussed Puerto Rico and ways of circumnavigating certain tariffs, if you will. Being in Puerto Rico provides you a lot of amazing tax benefits and loopholes. And so the Marijuana Venture article goes into talking about how additional costs on packaging and vape cartridges threaten already tight margins. The article doesn't go into other areas that are going to be affected, like lighting, greenhouses. And so really the cannabis industry is already really, really tight on margins, not able to deal with some of these issues with the president's 25% tariffs on Chinese goods. So it's hitting profits on farms and processors, distributors, and many other packaging companies from China, extracts oil with the vape cartridges. So those tariffs came to a surprise from a lot of businesses. Julia Jacobson, CEO of Astor Farms in California, said it was a complete shock. They just weren't really expecting this. And then the chief revenue officer at Cushco Holdings said that they certainly were surprised how it all came together.
Yeah, it's interesting, right? Chaos, right? The chaos of it all, how it creates challenges. And for some people, those are opportunities. It's like our brilliant homie who's got their airline, right? Where they're gearing up for moving cannabis internationally via air, right? And how you'd say, well, that seems zany, but nobody knows what's coming tomorrow. Is there going to be another tariff? Are some rules going to change? And if you happen to have the airline already ready on the day the rules change, you win. It's a zany industry, Cron.
Right. So this article goes in to say that being a smaller business really affects more heavily than it affects larger businesses. So more funded players like the Canadian companies coming in with higher capital are going to be less affected than these mom and pop shops that start up. But hopefully the tariffs will go away sooner rather than later. But they have to start banking into this. They have to bake it into the margins and keep trucking, as there will be more and more opportunities like Puerto Rico to survive. Whereas politically, there's so much uncertainty, you can't really guarantee anything except volatility. And so being in Puerto Rico offers some peace of mind and opportunities like 50% tax credits, 4% corporate tax caps, exemptions on import and export taxes. So it's an amazing opportunity, a good place to be, and try and survive through all of this chaos.
If you didn't know, you know now. And then how you find out is you dial up a luminary like Chronic and you say, tell me more about Puerto Rico. Because again, you're busy farming. There's so much to know. So yeah, I dig the Talking Hedge, brother. I'm learning some stuff.
With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe. Or don't. And I'm out.